Okay, Recons video on Sunday, the 20th of August, 2023. Just gone 3:40 a.m. Chicago time. Do hope you are doing well. So it's the weekend and time for another weekend futures market recap, where I go through 15 of the largest futures markets and I show you what I'm seeing on my charts. And hell's bells, that was quite a week. The sell-off continued and we reached about 280 points down from the recent high. Wednesday and Thursday, particularly nasty down days. And then on Friday, seemingly, we caught and had a little bit of a bounce. So the question is that it? Is it all done on the downside and we're going to rally from here? So I'm going to go through the Emini charts first, daily all the way down to the 15-minute and the 13,500 tip bar charts. And then we'll have a quick look at the triple signals on the tip bar charts for the 15 futures markets. But just before getting to the charts, just to say this video might come out a little bit late on Sunday, so apologies for that. Had a pretty busy week this week. I was in the UK for 3 days. And then today we're going out to lunch with some friends. Going to be one of those classic Sunday lunches in the middle of Provence, except it's 41 degrees Celsius here today. And yesterday we hit 43, which I think is about 109 Fahrenheit. I don't know why I'm complaining, because seemingly those kind of temperatures have been pretty common throughout the Northern Hemisphere this year. But anyway, for me it's a little bit of a shock. So let us talk about the E-mini first. We got our traditional setup with the two charts side by side, everything to do with volume on the left-hand side, everything to do with price on the right-hand side. Got better momentum beneath the price bars here, and better pro-am on the price bars, showing us professional and amateur activity, and then better sine wave here below the price bars, the plate of spaghetti that calculates cyclical turning points in 3 different time frames. And I've been rattling on and on about this for a while, but the background is red, which means we're in an uptrend on the daily chart in terms of price and volume. So the bars are printed in red, which means we're in an uptrend in terms of better sine wave, and in terms of better pro-am, we're also in an uptrend because we're above the blue professional bars that came in some months ago. Turns out this little Rambo sequence up here was very prescient, and talked about this at the time, with an exhaustion momentum pattern, that's the blue dot there, on better momentum, with Rambo patterns, which means the move is being led by the amateurs with low average trade size. Rambo stands for a potential reversal of an amateur breakout. And the exhaustion pattern and the Rambo pattern together means that is unstable, and that leads to a sell-off that we've had because we dropped below those amateur bars there. So I've been saying that for several weeks, and this little downtrend turned pretty nasty this week with Wednesday and Thursday's activity. And you can see here on better sine wave, we have now busted below support, that pullback in an uptrend support level on the lowest time frame here on the daily chart. And what we're looking for is to be caught by the next highest time frame. So we overshoot this little support and we're caught by a support when it comes in on the next highest time frame. And the problem with that is we're quite a ways away from that. The thinnest lines here are the lowest time frame, the daily time frame here, and that's what gave us our support level a couple of days ago there. And what we should be looking for is the thicker lines, slightly thicker lines, this one here, the intermediate time frame, to come together, to come down to the negative 100, to come together and cross, and that's when we'll signal that cyclically timing is right for a support to come in. And the problem with that is they're still a little bit parallel at the moment. So that means the trend is still in place, and we've not got a cyclical turn likely to happen soon-ish. So my guess is we're going to have to wait until that comes together before we get a real bounce. But let's go down through the time frames and see if we can see some other reasons why we might stick support somewhere between here, the 43.80 type level, and the 42.38 type level here. That breakout cyclical resistance on the highest time frame here is super important. So anywhere that sits in that general region is an area that we should be looking for support, somewhere between where we are now and that area there. So that's still, what is that, 140 points away. So that's what I'm looking for on the daily chart here, is for when these two lines come together and we get caught on that time frame. Now go down to the 135-minute chart. Here you can see the background's in red, and we've just gone through a dark period here where we've got price and volume both signaling in different directions. We're still, in terms of volume and better pro-am, in an uptrend, but in terms of price on better sine wave, we've briefly dropped into a downtrend when we dropped below that cyclical support there the pullback in an uptrend level. So the bars are white, which shows a downtrend in terms of price, but not in terms of volume. So we're looking for some catch. You can see here the highest time frame, that's the equivalent of that intermediate time frame on the daily chart. Those lines here are still parallel. They need to come together to drop down to negative 100, cross down here, and that'll signal cyclical support. So we're still in a downtrend at the moment there. 45-minute chart here, now can we start to see some volume patterns that might stop this move. The one thing we have seen on the 45-minute chart is an exhaustion sell signal here. So that's come in, so that is good. But the last time we saw blue professional bars, they were selling this move down. We tested up a little bit into that sequence there, and then we continued down. We've got no blue professional bars yet on the 45-minute chart, which isn't good. And on this time frame, you can see we've dropped through support on the intermediate and the highest time frame here. So we've got to come back and probably make pullback to end of trend on the intermediate time frame there. And then watch for blue professional bars coming in on those retests. So here on the 45-minute chart, we're a confirmed downtrend. The background is in gray, and so we've still got to look for those testing patterns where we come back into those lows where blue professional bars come in, maybe put in a bullish divergence pattern and some end of trends on the lowest time frame in the intermediate time frame in order to end that move on the 45-minute chart. And then the 15-minute chart here, you can see the beginning and the ends of the weeks marked by solid vertical yellow lines here, and that's this week's activity. And you can see here this has been a confirmed downtrend for 2.5 weeks on the 15-minute chart here with the background in gray. And yes, this is good that we've got exhaustion sell and bullish divergence come in, but when the bullish divergence is right on the zero line there, you can see that dot here is on the zero line, we need to look for a flush. Just like this one here, it was on the zero line, so we're looking for a flush, which means we're looking for another sell-off in terms of a negative volume, selling this move down. The question is, we're going to get a bounce first, and I would suggest we probably are going to get a little bit of a bounce, and then we'll sell that down, pull back to end of trend on the intermediate time frame. But on this time frame here, we've still got to come back up and make pull back to end of trend on the highest time frame. So these lines here have got to come back up, cross and push down again. So we've still got another cyclical pullback to end of trend to put in on the 15-minute chart. So although we bounced a little bit, there's no reason down here to call it a low. The blue professional bars, the last one we had, were last week on this chart. So those have got to come in, and we've got to trail down the trailing stop on Better Pro-Am here. This line's got to come back down and be broken before we get a change in trend on the 15-minute chart. So I'd suggest it's going to be a little bit bouncy for a while, and the idea as soon as we get into those cyclical resistance patterns is to sell it down until we get that real conviction on the downside that we've got blue professional bars and more exhaustion patterns coming in there. Tip bar chart. This is a 13,500 tip bar chart showing us the day and the night session. Remember, all of these other charts are the day session only. So on the tip bar chart here, you can see this week's activity. We had a little bit of rally at the beginning of the week, led into blue professional bars at the highs there with an exhaustion pattern. We sell off, we put in bearish divergence, bang, and we sell off here. This exhaustion sell is showing us the strength of the selling down here, and we've still got to see that type of a pattern and that type of read on the downside. And classic, we've got Rambo patterns here. I talk about my Rambo patterns all the time. So Rambo patterns the week before showed us a low that we had a little bit of a bounce from. Remember at that point there, the amateurs are selling a market short. They get wrong-footed. The market moves the other way. That moves all the other way. We go to a Rambo to Rambo channel. Whole series of Rambo patterns right here at the highs. They get wrong-footed at that point, and the market sells off. Continues to sell off all week until we get Rambo patterns right at the bottom down here on the 13,500 tip bar chart, almost into that 43.50 level, which is the low down here. So here we've got some blue professional bars coming in. We've still got to move down. Had another exhaustion pattern on the downside. So we've got resistance on this time frame, pull back to end of trend. So I think we'll probably have another push down there, but then we'll bounce from there until we get resistance on the highest time frame where this line comes in, and we'll put in another pullback to end of trend there. Remember, the pullback to end of trend patterns ripple through the time frames. We got the first one here on the lowest time frame. We're putting in a pullback to end of trend on the intermediate time frame. Then we'll come back. These lines will cross, and we'll put in pullback to end of trend on the highest time frame on the 13,500 tip bar chart. So we've got all of that to look forward to over this next week. So I'd suggest next week's going to be bouncy, and each of those times we come back up to to bounce off the lows. It'll be sold down until we really start to see blue professional bars coming in at the lows, exhaustion sell patterns coming in at the lows, and that'll show us that the low's been hit, and finally we can bounce from there. So there we go. That's what I'm seeing on the E-mini charts. Let's get to the tip bar charts for each of the futures markets, and we'll go through the Forex charts first. A little bit boring on the Forex charts here. For me, all of the activity is happening on the futures markets, more the commodity markets over here, the ags, crude, natural gas, and copper. Those are more interesting at the moment. But typically we go through the Forex charts first, so let me follow up with that. No signals on the Euro chart for the last 3 weeks. Whole bunch of blue professional down bars here, and we continue down. There's no follow-up blue professional bars coming in here, and the stop is miles away. So we're still in a downtrend on the Euro chart. Okay, so British pound next. You might recall last week I was long at the close of last week on the British pound, but then as soon as it dropped through this low, reversed and went short, took profits, and then reversed and went long on the British pound. And I was looking at the 250 chart for both of those signals. And so that was quite good on the British pound, and then I was able to jump into short the E-mini on Thursday, which was good also for a day trade. But it's a bit junky at the moment on the British pound because not all of the Forex charts are signaling together. We've got the Aussie dollar down here, nothing signaled last week or this week. Although down here we've got all kinds of exhaustion patterns going on. Only a couple of blue professional bars there at the lows. I think we need to see more of those for falling a low in the Aussie. But the Japanese yen did have a nice signal this week, and we had more blue professional bars, and this is the thing we need to be looking for. So we've got an exhaustion sell, bullish divergence. It's oversold with a background in red, and then a whole bunch of blue professional bars. And these patterns really work out well when we've got a whole bunch of blue professional bars coming in at those lows. Testing there with a flush pattern, exhaustion buy, getting the move going. We get a triple signal. We test into that breakout area, a couple of signs of strength, and the market takes off. We've got some blue professional bars here. We need to get above those in order to confirm that the Japanese yen is starting to rally a little bit. First of all, the E-mini chart here. So at the beginning of the week, we had a false signal, didn't really go anywhere. We've got exhaustion buy come in there. And then as soon as the triple pattern lined up, we got our signal short, which is a great signal into these lows. So the signal is exhaustion buy, bearish divergence. So that's one better momentum pattern. We've got blue professional bars coming at the lows, and the trailing stop gets broken here, and we're overbought at that point with the background in gray. So we got our triple signal, the market sells off, nice little stair step here. The blue professional bars kind of step in on that opportunity, the market continues to sell off, and that exhaustion pattern is getting the move going. So we've not seen that on the downside. We've got another stair step happening here on the retrace, blue professional bars come in, so we've still got that momentum on the downside until we see blue professional bars at the lows, exhaustion pattern at the lows, bullish divergence, and so on. So we're still in a downtrend on the E-mini. So gold, we had a whole bunch of signals this week. Has not caught at that point though. It's continued to sell off after exhaustion buy here, but we've got an exhaustion sell. Just one blue professional bar down here at the lows, so that's not enough to hold things, I'd suggest, but wait and see on gold. Silver is also trying to hold down here. The signal was last week, which was a little bit early really, not a whole bunch of blue professional bars leading to that, but we've got a whole bunch of blue professional bars happening here. So these ones are seemingly holding down here at 2260, 2270, some blue professional bars here. So if we get above 23 on silver, that would be good for a signal that happened a week ago. And then Bitcoin, Bitcoin got sold off super hard. Just kind of understand what the reason for the sell-off was, and there wasn't any particularly newsworthy. It's just the markets were selling off pretty hard Tuesday, Wednesday, and Thursday, and that's Bitcoin got taken out with all of that weakness in the traditional markets. So that's the blue professional bars selling here on a stair-step trade, and they just continued to sell it down. And we've gone to 25, it's almost 25,000 down here at the lows. But no blue professional bars yet here, and the trailing stop is miles away. We've got our exhaustion sell and bullish divergence, but that has to start to come together with blue professional bars and testing before we get a signal to reverse and go long on Bitcoin. So then these are the markets that are more interesting to me. I've been going on about crude for a while. On the longer time frame charts, crude looks pretty positive, and we had some good signals 2 weeks ago here into this rally up to 84. I thought it would keep on going at 83, 84, but no. They pushed it down pretty hard into 78s, but here's that whole family of blue professional bars come in. Exhaustion, sell, bullish divergence, a flush pattern. We break above the highs of those blue professional bars and we're oversold and we generate a triple signal. Nice little sign of strength comes in after we retest into that area and we've rallied back to 80. So that's good. Crude's looking nice. Natural gas we sold off at $3 up here, round number, come back down to 250. Again, another round number down here. And this is looking like it's going to signal first thing on Monday. We've got our exhaustion, sell, bullish divergence. We're oversold with the background in red. We've got some blue professional bars come in here. It looks like we're going to break the trailing stop there. So natural gas is interesting as well. Copper surprisingly, with all the weakness that we've had in the equities markets this week, copper was holding its ground down here at 365. I'm listening this week to quite a few podcasts just talking about the importance of copper going forward as we start to use more electricity in our energy mix. We're going to need huge amounts of copper. And it's surprising that copper isn't higher, given that all the plans are in place to do that massive electrification. But maybe that's why copper is holding, although this week the economic news was really bad. Copper hardly moved at all. We tested down to 365, but we signaled and rallied quite nicely there. We've got to break through these blue professional bars and that trailing stop on better pro-am. But that could be quite good for a trade this week. So interestingly, crude, natural gas and copper are looking pretty strong. And then also we've had some big sell-offs in the ags and they're starting to hold as well. So we got a signal last week that didn't really go anywhere. We only had one blue professional bar down here. Had a couple more and then another exhaustion pattern. So another signal again, another test down into this area with some blue professional bars coming in would look interesting for corn to signal. And then soybeans, that's looking good, although the signal was a couple of weeks ago. We've now tested into this 1300 type level with a whole bunch of exhaustion sell patterns, bullish divergence comes in, blue professional bars, we break above those highs and we're breaking out of that channel. So soybeans is looking strong, and also wheat, I would suggest. So the signals again last week didn't work out, but this week we've got a whole bunch of blue professional bars coming in at the lows, exhaustion sell, bullish divergence, we're oversold, and we've got blue professional bars on a little bit of a U-turn here. If we break above that, we'll get another signal in wheat. So interestingly, the Forex charts aren't interesting for me this week, but the commodities and the ags are. And I think it's going to be junky for the E-mini. Just every rally we have, it's going to sell down until we get all of that exhaustion sold out and blue professional bars and exhaustion patterns coming in at those lows. So there we go. Some thoughts on the charts this week. Hope your trading is going well and looking forward to next week's trade.